Big fancy homes, a status symbol like no other, like I'm sure Ralph's 10 homes. But the luxury home market has taken an even bigger nosedive than the average housing market. In fact, last year homeowners with mortgages of more than $1 million were defaulting at almost twice the U.S. rate. So with foreclosures increasing and prices plummeting, could this be the perfect time to buy your McMansion? Or is the bottom still months away for those homes? All right, thank you, Peter. Peter Grabel joins us right now, coming up. Peter, how are you?
I'm terrific, Chris. Thank you.
All right, good. Let me ask you about this. Our own Stuart Varney, who's a little old-fashioned in his ways, Tracy and I will admit, says the best investment today in America is a nice house in a nice neighborhood. Would you agree with that?
I think he's right on target. I'll tell you, I think the higher you go now, the better the bargains are. We're finding that luxury is a relative term. But where I'm based in Greenwich, Connecticut, we've got a lot of listings in the $3-4 million range that are down significantly from a couple of years ago. So if you've got the cash to borrow, there's some bargains.
But that's the key, right? Finding the money. Is the money available? I mean, jumbo loans are out there. Fannie and Freddie back, I think, up to about 730. After that, you're on your own. Are people getting loans?
You know, they really are. There's a bit of a misconception out there that, yes, Fannie and Freddie are not available for jumbo or super jumbo mortgages, but there's plenty of money out there. We're a luxury mortgage. We're a banker. We're lending money up to $5 million. And as long as people can show that they're qualified to borrow the money, rates are the best they've ever been.
What about defaults, too? Because we talk about the subprime and how that was really the cause of this real estate bubble, and then, of course, the secondary markets. But how much have we put aside what's happening in the jumbo markets and the more expensive homes out there in terms of really contributing to maybe the current real estate bubble going on?
Sure. Well, it's definitely going to be a continuing problem. I think we will start to see more and more defaults at the high-end range. And it's especially the lack of financing for some people is making it tougher for people to unload their property. So it's going to be an ongoing problem.
So what happens then with your buyers now when they come to you? Are they looking for different things? Are they saying, I got, whatever, $1 million to spend, I want a $3 million home? Like, has the perception changed?
Well, people are actually somewhat surprised that they can still get very good rates and good financing. They are finding that they're not getting 90% financing that they might have hoped for a couple of years ago. So it's certainly been scaled down a little bit, and the documentation has increased. The guidelines have become tougher. So lenders are certainly more stringent. But if you're qualified and have good credit and have some assets, people are quite pleasantly surprised at how low the rates are and how much money is available. And I think at the same time they're finding a great deal on the homes. So combination of low prices and low rates is attractive.
But is 20% down an absolute must?
No, in some cases we can still get 85% financing with good credit.
Wow.
Peter, I know you're in South Florida.
That's the high.
Yeah, I know you're in South Florida, so you know a lot about your market more than anywhere else around the country. But is it really geographic specific? I mean, are there some areas that are really getting hammered in the jumbo market and other areas that are actually thriving in this country?
Well, it is. I'm actually down here on vacation. I'm based in Greenwich, Connecticut, and real estate is always local, and certainly one of the biggest problems anywhere we're finding is appraisals. I've had a number of situations recently where a buyer has come and agreed to buy a home for $3 million, but the appraisals come in at $2.5 million. Well, banks are going to lend on the lower of the purchase price or the appraised value. So if you thought you were getting 80% of $3 million, you're now getting 80% of $2.5 million. You might not have the money, and also just psychologically, you might not want to go forward with that transaction. So appraisals are a big problem. They vary from region to region, but most of the country is having a problem now getting good appraised values, especially at the high end, just because there's not that much, there's not enough transactions.
Are we still seeing? We had a phase where we were seeing the wealthy come in, buy up the little homes, level them, and build the monstrosities. Are we starting to see that again too?
Sure. No, we're not. That was really very common in our area. We were seeing builders buying $2 million knockdowns, putting $2 million in and putting on the market for 6 or 7. The problem is those builders really don't qualify for today's guidelines of financing, and no one wants to take that sort of risk. So we've really seen the high-end building cut down dramatically, and I think that's a good thing. There's going to be less supply down the road.
Peter, how are the inventories? You know, we talk about inventory in general getting down closer to that 6-month level. Is that about consistent with the jumbos as well, or with the more expensive homes, I should say?
Yeah, we've seen the inventory come down. I think it's partly a lot of the high-end homes, people have started to rent them out if they couldn't sell them. People would put them up for rent. So that's decreased the inventory. And I think a lot of high-end sellers did have the means to sort of say, let's take this off the market until things recover. So inventory has come down, but there's a variety of reasons for it.
Quickly, though.
We have seen the sales activity pick up a lot, though.
Oh, okay, well, that's good.
We only have a few seconds, but we have seen the jumbo mortgage market hit some serious delinquency rates. I mean, I think we're up to about 9.6% now of jumbos that are in delinquency. Are we going to continue to see more of that?
I don't think that's something that's going to end anytime soon. I think until more financing is available and more high net worth people are confident about their income and their employment, I think it's going to be a while before that trend ends.
Peter, thanks for being with us. Enjoy your vacation down there.